key thing for us on that was about positioning the business. We weren't a modular manufacturer that happened to build homes using ex-offenders for employment. We were creating meaningful employment for ex-offenders by building houses. Social impact and purpose is definitely not the antithesis or a compromise to making profit. You can make good profits if you get your purpose, your trajectory on purpose correct.
Hello and welcome to the Developers Club podcast. My name is Ben Wilson, your host. Today I'm joined by Alistair Wickens of Impactology Limited, who's had multiple business ventures and now is a trusted advisor to businessmen the world over. Alistair, welcome.
Thanks for having me.
Thank you for coming. So what led you into purpose-driven social entrepreneurship? Let's go back to the beginning.
Well, the beginning was some time ago actually, but there was no magic moment in all of it when it happened. It was an evolution over time, I think. So originally I came out of a clinical career and then went into health technology, very much driven by the fact that you've got shareholders and you want to return a profit to or a margin to or value to the shareholders. And that was my focus as a young entrepreneur working here and overseas and so on. When I sold that business and moved out of that business, we went into the development sector, into the property sector, and it was driven by a realization that there was more to do with business than simply making money. And I think every business that I've had ever since going into that has chipped away just one the extra bit at the purpose side of things. So now the businesses that I run I would say the majority of them are driven by purpose as opposed to driven by money.
I was going to ask you what connects all these various different types of businesses you've done, but I think you've answered that well, and that's trying to put a much more positive spin on being an entrepreneur, because we do get a bad rap for being greedy and not caring about things. So I think that's a great answer to what you didn't know I was going to ask you, but I was going to ask you in terms of Quelth. And it was a global top 100 health app. What made that journey so compelling because you mentioned your app before?
Well, I think with all businesses, if you get out of bed in the morning knowing that you're making a real difference to people's lives, whether that's in health or whether that's in property, it's a serious driver. It's a serious motivator. And Quelth was one of those apps that I co-founded with two others.
When was this? How long ago?
That was at the beginning of the 2000s, and we exited from that in around 2018. But so it was quite a long journey, but it was a journey when health technology and mobile phones and all of the other digital technologies were coming of age. It was quite an exciting time to be involved, but it was also a time of great uncertainty because the market was moving. Nobody was quite sure where it was going to end up. So you had to be on your toes all the time.
I mean, that was really in the infancy of apps, really. So you were definitely in the right place, and you obviously saw the market, which is amazing. Because when you said how long ago, well, I thought you were going to say 5 years ago. I didn't think you were going to say in the early 2000s. And what set your app apart, do you think? Why was it successful and others weren't?
Well, I think we were fairly early on into using health technology or using mobile phones and technology like that to drive making a difference. There wasn't a lot of competition at that stage, but you can imagine that over time, the health tech giants quickly started to find their feet on this and get mass market appeal. And the thing that made it quite interesting but also challenging was the need to pivot the business quite so often. And we're seeing that in the housing market right now. Yeah. We know for a fact the market is moving and we can't predict it. We try to predict it, but we can't. The businesses that succeed are the ones that I think are able to pivot fairly quickly. And we'll talk about the structure of businesses later on.
So, and what was your pivot in that particular app? How did you pivot?
Well, I think it was the one that really stands out was the time that the technology started to emerge on the mobile phones, and everybody started to have a mobile phone that was not just capable of making phone calls, but could track where you were. could track your steps and ultimately could read your pulse and your blood pressure, and so the list goes on. If you're reliant on a certain technology to do that, and then all of a sudden a mobile phone giant comes out with it, you can't compete.
So, Alistair, other than obviously pivoting, which you said was incredibly important during you running that business, what else did you learn from building the brand? What other things have you taken from it?
Well, it's not easy. Building a brand is definitely not easy. The thing that does make it easier today than it was back then is that the consumer market, the market itself has changed. So when you start talking about investors, investors are not just wanting to put their money into a good return. I mean, that's a top motive for them. But increasingly, investors will look for seeing how they can diversify their investments. So it goes into socially motivated projects. And you see that in the housing sector, or I certainly found it in the housing sector. And then you look at employees. Employees increasingly want to work for a company that is seen to be doing good. And I don't know about you, but I don't know how often you've had to buy something where your decision has been based upon whether you buy something that is produced locally or something that's produced overseas.
Alistair, other than having to pivot and say that was a key part of that business, what other things have you learned along the way with that particular health app?
Well, I don't think it's exclusive to the health app, but it's certainly something I'm seeing increasingly with all the products, all the different businesses. So I've had a housing business. I've got a pen company now. We've got implantology. Yeah, we'll come back to that in a minute.
Yeah, I'd like to hear about that.
But there's all sorts of businesses now that are benefiting from a change in the way consumers are buying, how investors are investing, and also how the employees are wanting to engage with their employer. So just take an example, investors will want to diversify their money. So it just doesn't give them a pure capital return, but gives them also some sort of social return. There's something deep inside them that says it's not right just to be making financial gain all the time. Employees want to work for companies that are seen to be doing good. So, and going to the point about consumers, if you're buying something, there seems to be a preference at the moment for buying locally as opposed to buying from overseas. And it's all these preferences and changes that have started to guide the way that I think about how a brand is positioned now.
It's interesting you say that, because one thing I've noticed as a property guy is that, especially in the longer commercial leases, all of the big companies, your Apples, your Googles, they really want office space which is green and is doing their bit for the environment, for example. So exactly like you say, it's got a value on it now, which 10, 15 years ago really didn't have so much.
That's right.
And no doubt that will only get increased as time goes on. So.
Yeah, and I think the thing that is we're starting to see now, I don't know we've seen it quite yet in the housing sector, but certainly in the consumer sector, is that if you get that messaging right about purpose, you sell more products. And if you extend that a little bit further, which is really where my impactology company comes into it, because we're helping companies to understand that if you get your messaging right, and if you get the structure of your business right to support social impact, you will ultimately do better than companies that pay blatant disregard to social impact.
Yeah, well, it's funny you should come on to that, because I was going to ask you about, so impactology and creating or crafting a meaningful second act. So as I said to you before we spoke on the podcast, explain, I don't know much about this concept of second act, so why don't you tell our listeners and viewers what that is?
Absolutely, yeah. Well, I'll tell you a little story as to why it started. This probably puts it in context best, but when I sold out of the first business, so the health app, the Quelth app, the business was still running at the stage. We handed it across to somebody else. But ultimately, a new CEO came into that business, and to put a phrase together on it, you kind of fall off a cliff when your emails suddenly stop and the phone stops ringing and everybody in the business stops coming to you and saying, what do you think about the strategy and the vision? And that sounds great to most people, because I think most people spend most of their lives, if not all of their lives, working to a point where they can say, how can I retire and go and sail off into the sunset?
And get bored, presumably, a lot of the time.
Yeah. And I mean, there's only so much gardening you can do if you take time off. And 3 months in, I was itching to start something else. And at that stage, I knew very little about what I wanted to do. I just wanted to know that there was more to life than making money. And certainly I didn't want to be in the cut and thrust of the city any longer. I'd been there and had the bruises of that. The same last year when the housing business that I had, unfortunately, I had to shut that. But the same feeling was there again. You fall off a cliff and there's nothing there. And I started speaking to some senior executives around the city, people that I knew well, who had done very well in life. Either that or they were business entrepreneurs who had sold out their business. And I said to them, well, how do you cope with it? How do you cope when you leave the boardroom and you exit your business? And I was absolutely astounded that about 1 in every 3 person I spoke to felt the same, is that there was a total void. And because they'd spent most of their life just building houses or running a bank or, building whatever business it was, they knew nothing more than analysing the markets, commercial pricing and so on. They'd never actually sat down and looked inside themselves and said, what do I really want? What's my passion?
So you found a niche basically,
Yeah,
and you thought,
absolutely.
I'm going to service that niche, because it is very niche. But often I find the best businesses are those that are niche, because if you haven't got 100 people doing what you're doing, like if you're running a shop, it gives you an advantage straight away. And presumably the barriers to entry are quite high, because not everybody has the specialist knowledge to be able to do it, which you obviously have because of you're a serial entrepreneur. And you do a 12-week second act blueprint, which reframes success around fulfillment and impact.
Yeah.
So how does that work? Give us a little bit of a taster of that. I mean, obviously people have to sign up, won't they?
Well, I will. So I'm not going to give too much away. But no, seriously, there's a... I run executives through three phases on it. And the first is actually sitting down, just assessing and discovering what they really want to be doing in life. Because it's not running a bank, it's not building a house. There's something much deeper in all of us. So that discovery phase is about identifying what that is. And then you move through to the second phase. And there's no fixed timelines on this. We take it at the pace that the executive wants to run through. But the second then is analysing and working out where the roadmap is. Where do they want to go next? And I often talk about this in terms of mountaineering. You've ascended to the dizzying heights.
I've seen the image on your website. I've seen that lovely image.
So that's the principle behind it. You ascended once. Now where do you want to ascend? Where's your second act? Where's your second ascent?
Yeah.
And then phase 3 of what we do is about preparing you for basecamp. Helping you to put everything together so that you're ready to.
Nice metaphor. I think it works.
So it does work.
Yeah. And you only work with certain clients. You put a lot of value on exclusivity and confidentiality. Why is that?
Well, I think the people that I work with, and remember this has been going now for about 3 to 6 months, so it's fairly early stages at the moment. But the few people that we do work with at the moment are people that probably don't want their names bandied around in terms of seeking help or seeking support and this type of thing. And the people that have really got a very genuine desire to do something impactful are the people that don't want to stand on the top of the rooftops and shout it out and boast this is what they're doing. They just want to be discreet about doing it. So privacy and confidentiality is absolutely paramount, which is why I can't say to you, this is who we're working with.
No, sure. I wouldn't ask, but one thing you might be able to say is what sort of companies have these people come from? Is it tech? Is it property? Is it a mixture?
It's a complete mixture.
Oh, really?
Remember, it's early days again. So I couldn't say to you this is the demographic for it all. But I think the principles about what's in your heart and what's in mine are there whether you work in a bank or whether you work in property or in health tech. It makes very little difference. We've all got something that we would like to have to be remembered for, and it's not
legacy, basically.
A legacy, exactly. And what I'm helping to do is to shape their legacy after a lifetime of working in the commercial sector.
And does that have to be in a corporate way only, or could it be that there's something charitable that they do? So it's not just corporate. No. It could be a number of things that they've
no.
So what they've always wanted to do, basically, they've now made enough money that they don't really have to necessarily worry about money.
I mean, if you put it into context of where we are today, sitting in this podcast, you can have a property developer that's made a lot of money building out residential properties.
Not in this market.
Maybe a few years ago.
I'm joking.
But I think that the principle behind it is if they've made that money, do they go in and do they build another apartment block and make another series of multi-million returns, or are they satisfied with what they've got? But what they could do is be helping to invest in building a school for disadvantaged children, or could they be building some sort of commercial activity like a farm in Estonia or somewhere like that that's helping with vertical farming. There's ways of bringing that expertise across into different sectors.
You'll probably be able to tell me the word in Japanese. There's a word in Japanese where your passion meets with what you're good at.
Yeah.
I can't remember for the life of me. I can't remember what it's called. But
I know what you're talking about.
I've actually got a book on it on the side of my bed, which I clearly haven't read.
Yeah.
But it's a very lovely concept about the fact that if you can find what you're good at,
right.
what will give back to the world and what you can monetize, then that is
That's the sweet
niche.
spot.
And if you can just do something you love and make money from your home and dry.
That's exactly right.
If you can then do good by the world, then amazing.
Yeah.
But you also mentioned earlier, you touched on about the health monitoring, affordable housing homes that you had a business previous that you've now stopped that business, closed it down. But obviously we're a property podcast, so it'd be great to hear a little bit about that. Do you want to give us a bit of background on that?
Yeah, I mean the premise behind it was exactly the same as all of the other businesses. Is that if you can find a sector that is generating reasonable profits and reasonable margins, there's no reason why you can't achieve cost efficiencies in that business and use the profits for purpose. In other words, you build a purposeful business. Now, most property developers, most builders, most manufacturers will look at this and say, well, I build houses. That's what I do. That's how I describe it. And if we've got any profits left over, we write a check to a charity, and that's seen as the extent of the social impact.
Easy way out, isn't it? Really?
Well, it is, but it shouldn't be. It shouldn't be like that. But if you switch that around and you try to build a business that puts the purpose before the profit, and you get that absolutely right, the end result is that you end up being more profitable because people are coming to you at the moment because they want to buy from companies that are doing the right thing. So the business that I had was looking at the modular manufacturing side, and we managed to acquire a small modular manufacturing facility, which was already had a track record of 4 or 5 years, and it was struggling at the time, but it was doing well given the market conditions, but it was struggling to get real traction. And we went in and we did some turnaround on that business, and but the idea behind it was that we wanted to employ or continue employing ex-offenders out of prison and give those guys a chance to get their feet back on the road again. So the key thing for us on that was about positioning the business. We weren't a modular manufacturer that happened to build homes using ex-offenders for employment. We were creating meaningful employment for ex-offenders by building houses. And so we switched around the way we described it. Now, that was great because people bought into that. And we certainly had clients coming to the door who were very interested in that as a motive behind what we were doing. But it was a tough one to keep going.
Sounds a difficult business to run.
Yeah. It's very difficult
admirable
to run.
Though, very admirable.
Well, it's
tough.
I think what we managed to do was to prove that the concept that there was no reason why it wouldn't work, but the market conditions were just totally against, as you'll know and your listeners will know, market conditions are not helpful at the moment.
No, it's very, very, very tricky. And I guess what you're looking to do, as you say, is you're looking to the goodness in inverted commas that you're putting into a business. You're looking to leverage that.
Yeah.
And that's the key, isn't it?
Yeah,
and then use that as a way of selling things, presumably for a premium, because people are helping by buying that product or investing in it. So it's interesting. We actually have I'm a board member at the Developers Club as well as being the presenter of this, and one of our board and my other board colleagues, Dean Jarvis, he also he builds houses with a health. I'm going to totally undersell his company, so Dean, if you're listening, I apologise. But his developments are very much health led, and he's quite unique in what he does. I'm not going to embarrass myself and try and guess or remember what exactly why they're different to a normal house. But I know that he puts a lot of effort into that side of the business, which is quite unique. He's the only one on the whole board of say 15 or 20 of us that do that. So
well, it was an area that we were particularly interested in as an organisation, because with a clinical background, that was exactly the area that I was.
Were you a doctor? Were you?
No, I wasn't. I was in the health sector. I was doing ophthalmology for children.
Wow. Okay. Done a lot, haven't you?
It's been an interesting career.
Yeah. So we've just mentioned about how you've done a lot. You also mentioned earlier you've got a pen business. So why don't you tell me a little bit about that?
Again, it's no surprise to you that the premise behind the pen company is really about how do you create something that people want or aspire to have, but use the proceeds for doing good. As a theme through all of my businesses, and it's what I help companies do. But there's a small company that we've established called Arken Ink.
Arken Ink.
Arken Ink, ARC and Ink.
Yeah.
But Arken Ink is, the arc element of it is the story behind it. The ink is obviously the writing. But it's quite a remarkable story, because about 6 months ago, I was looking at how we could take a unit or something like a house, in this case it's a pen, how you could take a physical product and how you could sell that to people that wanted to buy it, make enough money out of it, and put the money into what's known as a donor advised fund, which is a
donor advised fund.
DAF, they call them DAFs in the market. But the idea behind this was, could I create a product that would compete with something like a Mont Blanc that was aspirational, that was handmade, that was crafted in a beautiful way, that you could sell at a profit, and the profit would then, 50% of that profit would go into the donor advised fund, and then you'd use that for financing or helping and supporting people like prison leavers, for example. And so Arken Ink was formed on that basis, is to try and get the pens produced. So these pens that we've got, that's one of the pens there. Very heavy pens.
Yeah, wow.
But all handcrafted.
Beautiful.
And they're made, each of the...
It's wood, is it?
Yeah, it is. It's a wood block that's carved by hand.
Very beautiful. Not everyone will, some people will be listening, but it's a very beautiful wooden pen. It's gorgeous.
So that's the type of thing. And Arken Ink is just, I don't want to push that brand, but I'm just simply saying Arken Ink is a really good example of how you can have a really small product done on a cottage production type process, but you can generate really a lot of good from that. Or you can have a business like manufacturing houses inside a factory, or building residential property in central London, and you can still apply the same principles.
And what would one of these pens cost?
Well, they're about £200.
£200, but a lot of that's going to a charitable cause. Yes. So, and the USP of the pens is that very fact. So rather than buy a Mont Blanc and spend £500.
Well, if you buy a Mont Blanc, you're buying pure luxury. If you buy an Arken Ink pen, you're buying the luxury element of it and the handmade crafted bit, but you're also buying the social impact. So it's luxury with impact.
Yeah,
if you want to put it that way.
I mean, you've done so many things. I mean, you've been a founder, investor, mentor. And what do you think is what qualities have kept you centered across those roles?
Well, it's a good question, and I think this is a really good example of where there's no one quality that fits the bill all the way across. The job description changes. So whether you're a chairman, whether you're a mentor, whether you're a founder, the job description is changing. But there's certain things that I would like to see in all of my businesses, and one of those is the tension that is created. We tend, when you're in a management position, you tend to work hard at trying to reduce tension in a business. You want harmony. You want everybody to get on with each other.
Tricky with staff.
It is very tricky, but actually, I think there's a positive element in that. As a founder, you're trying to build a product against a market that is constantly playing games with you. As an investor, you're kind of a bit of a cynic. You're kind of looking at things, and you're always got one eye on the risk. As a mentee, you're looking at how do you challenge people. As a chairman, you're looking at it from a stewardship perspective. So there's all these different roles that you play. But I think the key thing is how do you maintain the tension in that? How do you, as a founder, create a product that is really good, but also address the market needs? How do you, as an investor, make sure that you're giving the company enough finance to keep it going, but keeping an eye on the risk? And I guess it's a bit like if you're a musician and you play the violin, if you don't tighten the string well enough, it makes a rotten noise. It doesn't make any noise, really. If you over tighten it, it snaps. But if you get it right, it makes a nice noise. Absolutely. And I think that's the overriding thing that through all of my business experience I've tried to maintain. Is how do you maintain that perfect tension between one end of the spectrum and the other? It's what I spend probably 90% of my time working with companies doing, is how do you get the right balance in that tension?
Yeah, I always use the analogy of, sitting on an egg almost. If you squash it, you break it. If you don't look after it enough, then it doesn't survive. I think it's the same thing as what you say. But it must be difficult to you've got the ambition of a founder or an entrepreneur that you're coaching, let's say, and then they're obviously trying to make as much money as possible. Then you've got the personal purpose and the impact societally. So that's pretty hard to. What you would think that the profitability is always going to be the one pushing forward. So I guess you're there to try and advise on how to find the balance.
Get the balance.
Which sounds like it would be quite tricky.
It is, but it's possible to get it. Yeah. And I think when you've got it because you start to see clients coming to your door. So if you take people like, if you take Cook, the food shop here in the UK, or if you take Tony's Chocolonely or something like that. These companies have done remarkable things because they're doing good. I believe it's because they're doing good and they're positioning their product in the right way.
Tony's is the really brightly coloured bars. I see. I didn't know it was Chocolonely the second half. Great name.
It's totally memorable. But they've got a great, that type of marketing where they're actually positioning themselves as using what's the right word? They're getting the ethical farm, the fair trade chocolate in here, and the cocoa beans and so on. I think if I remember rightly, they have something like a 23% uplift in their reported their finances over the past 24 months or 12 months. So it is possible to get the balance right and to tip it in favour of the company and the shareholders.
There just has to be a want to do it, I guess, and that comes from the top down. I mean, I've always thought, bringing it back to developers, I know a lot of the big development companies, they put on charity golf days and they give to children's charities, cancer research, that sort of thing. But I mean, we've got a big problem in this country with homelessness, and I've always thought that as a sector, a property sector, we could do a heck of a lot more to help that situation. It's something quite close to my heart because I volunteered at Crisis at Christmas and We Know Crisis for 13 years, so I have quite a good understanding of it. But obviously the problem with that is that a lot of it is mental health related and also substance abuse related.
Yeah, it is.
But I think the property sector could get a lot more involved in that and try and solve the homelessness problem, because there's certainly enough money swilling around to do it. But like you say, people have got to want to do it. And sometimes it's just easier just to say, well, we'll write a cheque for £1 million and donate it to the known charities, which I'm not saying that's not a lovely thing as well, but
it's the right thing to do that. But I think even
there's better ways.
Homelessness is a massive issue. It's another podcast.
Yeah, I didn't want to go too down the rabbit hole.
But I think we've all got it within us to do something to help with the homelessness issue. Because homelessness, my experience of working in the homelessness sector, we run a company in Eastbourne called Goum Homes, which is providing homes that are funded by local investors for the underprivileged people or families. And it's been running since 2014. It's successsuccessful in that the small business that we've got there is housing people.
HMOs you're buying, or what sort of property you're buying?
Straightforward terraced properties, 2 to 3 bedroom terraced properties.
Letting them out as a whole on a long-term assured child tenancy.
Yeah. And it's working very well. And we've had in the houses that we've got, we've had the turnover of the people going through it. They've stayed for around 5 years. Yeah. So you've got long-term tenants there. We charge slightly less than the market rate for the rent, But as a result, you get people that tend to be looking after your properties. And by and large, we've had good success with that. So your maintenance costs are down and so on and so forth. So, but I think homelessness is not, it's not all about people that have got mental health issues, drug issues. It's not all about people like that.
No.
The majority of people that are homeless, unfortunately, are the people that have been forced into a situation that they don't want to be in.
Yeah.
And I think there are models out there that we as a sector, I'm talking about the housing sector, could look at in detail. And if we got over our obsession with shareholder returns, profits, margins, all the rest of the stuff, we've got to have that in order to survive. But if we can add in another factor, which is looking at social impact and real value to community, I think there is a way through helping out this particular issue. When I set up Goum Group, I remember getting a letter from Homes England, or from one of the senior managers at Homes England, and he looked at the business model that we got, which was radically different to what was out there at the time. And he said, if your model works, it's going to radically transform the landscape for affordable housing in England. Now, we had a model that worked. It's just that the market was kind of heavily against us. But it was an interesting model. And if we'd had deep pockets, we could have made it work.
Yeah. Well, it's a shame that it didn't, but I mean, you know as well as I do. I mean, I've done a number of businesses. I've had some great successes and some failures, and you know, one thing you do when they don't quite work out is you learn a lot more than when things go brilliantly. When you make loads of money, you don't really learn very much. You think you're great. When things are tougher, I always try and think of, when I have a difficult business or whatever, I always think, well, I won't, you know, what I've learned from this is going to make me money in the future, and you've got to try and be positive about it, haven't you?
You have.
So you talked about you've got a portfolio of properties in Eastbourne, but you've also, going a bit further afield, you've worked in Hong Kong and China. Not that Eastbourne isn't glamorous and down there on the coast, south coast, but how's that shaped your approach to leadership, going over to the Far East?
Well, it's a very different market.
I think so.
I was over there raising investment for the health tech business, and spent quite a lot of time going backwards and forwards to China and to Hong Kong, as well as going the opposite direction into the States.
Whereabouts in the States?
Most of the work was being done in the San Francisco area, so the top of the Silicon Valley area. But investors are all over the place, so wherever they go
where the money is, I guess.
Yeah, you have to follow the money.
Yeah.
But the interesting thing, to answer your question, is that the cultures were so different between the Americas and then the Europeans and then the Far East. You learnt an awful lot about the need to respect the cultures, the need to really understand the cultures for doing business. You can't do business in China and Hong Kong unless you really understand the ethos behind doing business. Otherwise, you just get kicked out.
What would be an example of that?
The time it takes to get deals done is very different.
Slower?
Yeah, much slower in the Far East. And there's a reason for that, because there's a lot of it is built upon trust and respect, and you don't do that overnight. And so you have to spend time getting to know the families and to get to know the chief exec. And then when you ultimately pass the test and you've got through the board, you then have to meet the family of the executive as well. And really, it's much more. There's a deep meaning behind all of it, which we haven't got time to go in now.
Sure.
But you need to understand that, because as a Brit, it's quite easy to go in there and say, you're nodding your head, so I'll shake your hand and the deal's done, I'll get back on the plane and go home
Fascinating,
again.
isn't it?
But it's not about that. It's a lot deeper. Whereas in the States, if you go the opposite way, their aptitude to risk is so different to the attitude.
Much higher.
No, much less.
Really? Oh, wow. I thought it would be higher.
Yeah, much less. I mean,
interesting.
It would be interesting to do if we were running a modular factory in the States. I believe it would be far easier to raise the investment for that than it is to raise the investment here in the UK, because the appetite to risk is far lower in the Americas. And there's also an element about if you haven't failed in business, then the States don't really want to know, because they want to know that you've had that learning. They want to know that you've been through that, you understand the pains that it causes when a business does go down. So I think the cultures were incredibly different, and it's incredibly important that you understood that when you were trying to do business.
So no, it's interesting what you say, because I think when you say about they like to know that in the States that you failed, whenever I do an investor deck for if I'm trying to raise investment, I always mention one deal that didn't go well as a way of saying this is what I do when things, which sometimes they will go wrong. And I think it makes you look a lot more real to investors, and it kind of wrong foots them, because everyone else will just write, oh yeah, we made 25% return on this, or whatever, our yield was 25%, let's say. Whereas actually, if you put in there, well, I didn't make any money in this deal, but what I did learn is this, and that, and I won't do it with your money. I think I have to say I very rarely haven't won investment when I've got to that stage, and I think it just shows that you're a lot more real than a lot of people out there. So, and also what you were saying about with going to China and these different nuances, if you like. When you're negotiating with someone, I've always learned that you need to know your opposite number, who you're up against. So I've researched them, figure out, go through company's house, have a look at when their year end is, have they got debts, blah, blah, blah. But it's the same with if you're going into another country to negotiate with someone or to try and get some investment from them. The more you learn, and it shows respect, right? That you've actually bothered to have a look.
And I think if you go back to the impactology point, I am working with very senior executives, and you could say, who am I to be working with these guys that have built massive businesses that far eclipse whatever I've done? The answer to that is that I've been through the pains of businesses not working out. I've been through the pains of investment not coming through when it should have done. And I've been through I've experienced what it's like to suddenly be cast adrift from a business. And I'm saying that in the nicest possible way, because when you leave a business, you do feel that you're being cast adrift. And I think that's an important element for executives who have spent 30 years at the top of a business, suddenly finding they're going into retirement. They have exactly the same feeling.
Yeah, a good friend of mine sold his finance business for a 9-figure sum, and he was telling me that it was almost like a grieving process. Right, He'd gone from being the CEO with 800 staff to literally the next day he had the best part of 40 million quid in his bank account from his share in the business, and he had nothing to do. And for a while he travelled around on jets and went on holiday and played golf, but within a few weeks he was bored and really missed his old business. So I think it becomes part of you, doesn't it? If you love what you do and you're an entrepreneur, it really is part of it.
But if you've got that money in the bank,
it helps.
It certainly helps, but it also means that you've got the wherewithal and the ability, you've got the tools in your kit bag to make a significant difference to a real world issue. Absolutely. So the argument is, if you've got that money in your bank, why is it just sitting in your bank when it could actually be helping to build something or create something that is going to bring a huge life-changing impact to many, many people?
Well, I think you've got Warren Buffett and co. They're all agreeing to give, is it 97% or 99% of their wealth? I think John Caldwell signed up to that. There's a lot of it's becoming a lot more common now, isn't it, to actually give something back? Because in reality, how much money does someone need? If your father and mother are worth $150 billion, do you really need to inherit $150 billion?
Well, that's the
$1 billion would be fine.
That's the change that we were talking about a little earlier in the podcast, about the investor's attitude.
Slowly but surely
is migrating. So
it's fascinating, and it's inspired me as well. I feel like I need to go and do some more socially responsive. I'm pretty good at with the charity stuff, but I think you've inspired me. So that's great, and hopefully you'll inspire our listeners. So let's close things with a bit of a quick fire round of questions. So what's the biggest risk you've taken that shaped your thinking?
I think trying to create a business that did something that successive governments have failed to achieve, which was to try and resolve the affordability of homes.
That's a good answer. And what's one common myth about social entrepreneurship that you want to debunk?
Well, that's pretty easy. Is that
thought you might know
social impact and purpose is definitely not the antithesis or a compromise to making profit. You can make good profits if you get your trajectory on purpose correct.
Okay. And book, idea, or thinker that's shifted your perspective most?
Well, I think the obvious one is to go to something like Simon Sinek's books that always talk about purpose.
Which book, sorry?
Simon Sinek's books. So he talks about the why in business. But you mentioned the Japanese word, and I know exactly what you mean. I just
It
can't
begins with
remember
K.
It's a 6-letter word.
Yeah.
But I think that type of inspiration has driven me all the way through. Is that when you draw the Venn diagram and you have your passion,
That's it.
you have money in it, and you can see how you can make money, you can see how you can make a difference and an impact. When you're working at the intersection of those, that's your sweet spot.
Absolutely. People are going to be screaming that word at the podcast, whatever they're listening or watching on. And finally, what does impact mean to you?
Fulfillment, I think.
Great. What a great way to end. Alistair, thank you very much. That was incredibly insightful. Thank you for watching or listening. My name is Ben Wilson. This is the Developers Club podcast. Thank you for listening.